Hey everybody, Economic Ninja here. Let's talk about what's going on with the Federal Reserve, the taper talk, and the possibility of a interest rate hike. So I've been getting a lot of questions about this, and it sounds funny, but a lot of times I don't give it any second thought because I know the situation that we're in. I understand it. The Fed understands it, and yet they love to throw out these narratives to get to sway people one way or the other. And so let me explain that. We all know that the Federal Reserve cannot raise interest rates because no one can service their debt. They're having a hard time servicing the debt, whatever, we're talking about companies or governments, at the current situation, right? Everybody is so far in debt right now, and businesses are hanging on literally by a thread right now. To say that the Federal Reserve could get away with any interest rate increase is a joke. The last time the Fed did this was 2015. It was actually late 2015, and they started raising rates. And by, I want to say, this is going off my memory, by October of 18, they started doing this every few months, 0.25%. They couldn't even get to, I believe, 2.25% as far as a Fed's fund rate, and everything started coming apart, right? Well, now to say that we're in a worse situation is obviously an understatement, and I guarantee 99% of you listening to this video agree with that. If you do agree, do me a favor and hashtag, I don't even know what you to hashtag. My point being is that you made it this far and you're in agreement. Just put agreed. So the Federal Reserve does these things. They like to spook markets, and they like to pump up markets in the way that they speak. Everybody's always, combing over their minutes like crazy, or their Jackson Hole meeting agenda and minutes every time it happens. And so one thing that the Federal Reserve can do to bolster, give the market like a euphoric feeling, or give them a pleasant feeling like, hey, everything's fine, go out and buy more stocks, go get into more debt. And that is to say that, you know what, the economic landscape is in a position to where it is strong enough to where we can raise rates. And they like to hint that out. At first they hint it out just to see if the market will freak out. And if it doesn't, then they talk about it a little bit more, and getting people feeling good about where they are right now in the economy in this quarter. And they always talk about how they're going to do it in the future. So if they're going to do it in the future, then things are great right now. Another thing is this taper talk, where they said, hey, we're gonna stop, we're gonna slowly pull the plug on the life support for the economy. So, it's on life support right now, it's hurting, but you know what? It's not going to be hurting in a little bit. We can see things are doing good, so we're getting ready. We're just going to dial down the life support, right? And they also, again, want to give you that feeling that everything's good. Well, I want you to understand they did the exact same things in 2015, like I said. It didn't work, and they did the exact same things back in before the Great Recession, all right? This is kabuki theater to me. This is a non-starter. It's not going to happen. And what they're going to do, this is one way the Federal Reserve is able to con the markets into feeling good about themselves. And then, because they know it's not good, as we get closer and closer to this supposed taper, when they're going to slow their purchase of the bonds, they're going to turn around and they're going to say, you know what? It's like a bullet in the chamber, even though it isn't, because technically the only bullets the Federal Reserve has in their weapon is interest rate dropping. That's the only thing they can do, right? Between dropping rates and printing money, that's really all they can do. So they get you believing it's like a bullet in the chamber, but it's an invisible bullet. Get you feeling like it's good. And so people start buying again. There's an economic flurry of purchases and good feelings. And then when the public goes, wait a minute, maybe this isn't so good, there's bad stuff, they go, you know what, you're right, it's not looking that good, we're not going to taper, or we'll put off the tapering. And then the economy's like, oh, good, yeah, we need the life support, we need the QE, the quantitative easing, we need that kind of stuff. And then again, it's boosting it back up. This is literally like hocus pocus. You don't see what's going on over here. The Wizard of Oz is behind the curtain pulling the strings. It's funny, it's the Wizard of Oz, right? OZ stands for ounce. It's interesting that it's an emerald city of green, just like our currency. Anyway, guys, I'm going to leave you with those thoughts, and half of you might be going, what is he talking about? Put it in the comments if you guys know. With that being said, the Economic Ninja is out.